Hey, Jamie and Steve, what's going on?
Hey, thank you very much, Scott. Steve, what's going on in your neck of the woods today?
Oh, not much, just another Monday, but pretty decent green over here, so I'm happy.
Yeah, it was a green Monday, and we'll get to that in just a moment. Just want to thank everybody for taking the time to pop in. We know you guys are busy, so much appreciated. So today is October 5th, and let's get on with the show. But before we get into the good stuff, just want to take a brief moment to quickly go over the disclaimer here. Obviously, we're all big boys and girls here, and all the information that we share with you guys in this webinar or any of the other webinars that we have coming at you on a weekly basis is for educational purposes only. So if you do need investment advice, please seek out somebody like a registered investment advisor or a Series 7 licensed stockbroker that can legally dispense that type of information for you. Once again, all the information we share with you guys in these webinars is for educational purposes only. And always like to take a little bit of time at the top of the hour here before we get into the content for the benefit of the newer folks to let everybody know the community that we have built around the TI technology. And right up here in the upper left-hand corner, we've got the trading room, which is hosted by Mr. Barry Anderson. And that trading room is opened, I think he opens at about 30 minutes before the open. So plenty of time to get in there and get settled in. But Barry does a fantastic job at moderating a room, typically with somewhere, depending on the day and the season, whether it's earnings season, could have 300 people in it, could have 500 people in it. And Barry does a fantastic job at showcasing the way he uses the tech, as well as answering questions for just about anything TI related in there as well. And lastly, before I forget about this, the cost of the trading room is free. All right, so if you've shopped around for trading rooms to hang out in, you've probably noticed that most of those that are worth their salt are not free, whereas ours is available to you at no additional cost. Matter of fact, you don't even have to be a subscriber to get in there and check it out. So take advantage of that resource. And of course, today's Monday. You get myself and Steve. Steve's going to take the steering wheel for tomorrow with the trade of the week. Andy Lindloff's going to ride shotgun with him. Get to the halfway point, and we bring in our CEO and founder, Dan Merkin, along with our Chief Technical Officer, Brad Williams, always entertaining with those two. And then Andy's going to round out the 5 p.m. Eastern slots on Thursdays with the Trading Studio, and I'll ride shotgun with him. And we also are continuing at daily support, I should say our live support session every weekday from 12 p.m. to 1 p.m. Eastern. We allocate that hour so that anybody that has questions or needs help with anything TI related can come in there and get live help from one of our trader individuals. And we usually have a different person on the mic each and every day. So come on in there and take advantage of the support session. And on the next slide here, you'll see how to get there. trade-ideas.com/live. Since it's hosted on YouTube, you can bookmark that URL for easy access, same bat time, same bat channel each and every day. And a little peek at how our user base has been expanding over the past few years. AI introduction back in 2016, and as you can see, we're enjoying some nice growth, pushing through 2020. Of course, we've had a little bit of help this year for obvious reasons. A lot of people that were not in the markets are now in the markets due to the macro effects out there, and I'll just leave it at that. But needless to say, since we introduced the AI, our subscription base has greatly increased and continues to do so. Also, along with our increasing subscriber base, our orders, these are live and demo orders that you see here. And of course, this is only representative of orders being pushed through interactive brokers using our Brokerage Plus module, since it is the only broker-dealer that is currently compatible with Brokerage Plus. This is the one we decided to go with first just because of their footprint being one of the largest retail outfits out there. But bottom line is, you can see month-over-month increases in the blue and the orange. The blue orders are live orders filled. The orange orders are being pumped through demo mode. Each and every month, some of those demo orders convert into live orders. So we've just got a nice steady increase. The irony here is that we decided to go with IB not only because of their big footprint, but also because they had the most competitive commission rate out there. But we've seen a lot change in the interim with the advent of the zero commission game and everybody going to that. So if we keep our fingers crossed and wish real hard here, hopefully we're going to see the Ameritrade version of Brokerage Plus roll out relatively soon. That'll be our first foray into the $0 broker-dealer world, and that's going to be quite a game changer there. So exciting things coming up. For those of you chomping at the bit with E-Trade as well for Brokerage Plus, I hear that's second in the pecking order, but I do hear that Ameritrade is a little bit ahead in development. But hopefully both of those modules will be rolled out before too long. Okay, on to the good stuff here. All right, here we are at today's topics. So in keeping with tradition, strong day in the market today. So Steve, if you're ready to talk about the indices and where they've been and where they might be going, I'm going to kick it on over to you. I think you might be on mute there, Steve.
I apologize. I was going to say I was speaking into that. Was that you that put me on mute earlier, or was that Scott?
I did earlier.
I apologize
because I'm like, he might not know he's not
No,
muted.
I don't. It's this stupid button. I get my knee. It rests on my knee, and then it clicks under the desk. And before you know it, I become a chronic sire when I don't think I'm on mute over here.
No
Just kind of. Anyway, apologize for that. All right. XPA. We'll talk about that maybe tomorrow. Let's talk about the market in general. A lot of good things happening if you're a bull, and you should be, because there's really no reason to be a bear unless the market dictates. But a little trip down memory lane. We'll go back a little bit. You know, what we've talked, that's always good news after market prices. Let's go back a little bit in the time machine. You know, when we broke here, big solid break, big volume in the market, you know, we were on notice, watching that 20-day moving average, making sure we held that. And then all of a sudden we realized that broke and it looked like the range is between the 20 and the 50. Okay, that became our range. Got to hold that 50. Bounced up into the armpit, as we called it last week, and then broke the 50. Okay, well, we became in no man's land down here, but sometimes we have to defer left and take a look at, see if there's pivot, resistance, or support lines, which in fact, in hindsight, there was a beautiful bounce off that tail, a nice little retest there, and we were right back into the game again. And I said, you know, we're back into the armpit here again last weekend, just like we were back here under the moving averages, through the price down to lows. Could have happened again. Chances usually favor that kind of action, quite honestly, but what didn't happen was that. What happened was a market that's extremely strong fought its way through these nets and these hurdles and closed again in free air. It's like it just took its mask off, Jamie. You like that? Breathing free air here again. It's not breathing its own air. It's very strong, very, very constructive. 3 days, 2 days above actually the 50-day moving average now. Very constructive moving average of the 10-period, curling and turning back up and beginning to support our prices again. We're back here. Those moving averages were anything but supportive. They were resistance. So very strong, very good looking chart over there. And the NASDAQ, which basically led us from beginning about a day ahead of time on the breakdown, and has led us about a day ahead of time on the recovery. We've got 1, 2, 3, 4 days of closing prices above the 50. I don't call it 3 days above the 50, but also in very much clean air over here in the NASDAQ. And as we all know, the tech has led this rally higher with COVID, and for many other reasons. It was leading even before then, but it's doubly leading now. The NASDAQ is where you want to look to keep an eye on for what's happening. Getting back to bears are on their heels. The bulls have grabbed control again of this market in both the NASDAQ and the Qs. I wanted to go back and sometimes take a secondary look at something else. Here's my clean chart with no moving averages, and this is where we can use the anchored VWAP that Brian Shannon always shows me. I'll show him my moving averages and he shows me his, and we both kind of come to the same agreement a lot of times. Let's click into that. This is the volume weighted average anchored from everybody who bought the highs back here. They're all underwater and have been underwater for a little bit of a little while, and you know that volume weighted anchored VWAP really did show some resistance. Broke above on this day, acted as support this day, back down, and where are we now? I think we need to move forward. There we go. and there's today back above. So we've had 1, 2, 3, 4, 5 closing definitive days above that in the NASDAQ and the Qs. Let's look at the SPY. Same thing. We can take this off now. I think that reference will make sense to us. Grab our anchored VWAP from everybody that bought the highs on this day. We see a nice resistance down, never got above, big resistance there, regained support perhaps on Thursday of last week, and then definitively back above the anchored VWAP. So the bulls, I think in both of those time frames, both of those perspectives, that's what I'm looking for, is showing that they agree. It's the winds are in your face right now if you are a bear looking for lower prices. We had every opportunity to do so. Again, we had every opportunity. If we go back to the bigger picture chart, hang on one second. Where'd you go? Ah, there it is. Confusing myself. The bigger picture chart, we had every opportunity to be scared back here. This was ugly. This was a very ugly chart, but in 1, 2, 3, 4, 5, 7, 6 or 7 trading days, a complete about face and a lot of constructive work is done here in this last week. Those last 5 days, we chewed through this netting, chewed through those moving averages, and no longer became the armpit. It's becoming more like a palm of a hand, and hopefully the bird will take flight. So that's really what I'm looking at over here. I'll talk more about probably sectors tomorrow in my afternoon webinar. That's it.
No, that's good stuff. All those moving averages being reclaimed. I really like that VWAP illustration as well. So
confirmation, yeah. It's never one or the other or what have you. I mean, Brian is a great trader, you know, so are you and I, Jamie, but we look at all things in different perspectives. Jamie has his go-to indicators, like certainly sets the flavor of the day, obviously with his compare count window, which he often references. Maybe he will again today.
Well, and that's going to parlay perfectly into the next topic here, because it was quite obvious that things felt strong if you were a bull. So having said that, let me grab the screen from you and we'll get on with it. Okay, you should have eyes back on my desktop.
Yep, I'll go back on mute.
Okay, and look at these compare count readings. As Steve was just describing, my compare count windows, or really my compare count window. I mean, you can make one for basically whatever it is that you want to keep count of. But this one is looking at the larger cap stocks, and by larger cap, I mean things that are capitalized over $4 billion, okay? That's the minimum. And what I do is I look 15 minutes into the open, I see what the readings are, and typically you don't really pay much attention to it unless we have a bias of north of 55% one way or the other, 55% up, 55% down, but that's real marginal, okay? I'd like to see them in the higher 50s, maybe even approaching 60. So you can imagine after the first 15 minutes today, where, you know, the SPY didn't just take off and run. I mean, that is a nice little green candle there in the opening 15 minutes, as you can see. And I'll just make sure people can see the candle that I'm talking about there, right here, okay? Not the hugest candle in the world, but we can clearly see what, you know, what the larger index did after the first 15-minute candle. It took the first leg up, pulled a little consolidation for the rest of the day, took a little pullback on the hammer, came back up here and reclaimed that 10 period and finished up pretty close to highs today. So a nice little leading indicator is the way that the compare count windows played out today, with a massive upside count of 76%. So that was the first thing that got me started today, and thought to myself, well, you know, you better focus on the long side today. There will be some short plays out there, but that's going to be swimming against the current, so focus on the long. So that's what that was pretty much the theme that was set for today. And we're going to talk about some other stocks that went up, but first we're going to talk about Holly, who has been kind of hit or miss as of late. You know, winning day, losing day, winning day, losing day. That is not uncommon when we get into markets as we're seeing here. All right, approaching highs again, coming off of this little bottom out. And then we've got a lot of gaps in there as well. And of course, we all know that the bigger the gap, typically the harder the action is to call, whether you're a human or a statistically weighted system like the AI. So not a big trading day as far as trades go for Holly today. If we kind of check out the toolbar or the channel bar over here, what we have here, we had a grand total of 1 from 1.2.0, and a little bit shocking today that NEO was absolutely silent with 0 trades, because NEO is the more aggressive of the trio, and typically the one doing a lot of the dominating, having big winning days, but it can pack on larger losing days as well. But NEO was silent today. So just keep in mind before we start talking about these trades, the totals that you're seeing over here are based on 100 shares per trade. The way that I'm working my numbers here is I'm risking $100 per trade. So I'm not saying just get 100 shares, saying risk $100, and then the system will get me in the appropriate amount of shares, as you can see through the share column right here. Okay, so let's take a peek here. First, let's talk about the things that, well, as I was saying earlier about Holly, you know, over last week, there wasn't a whole lot of moderate and conservative spread, at least not on Monday anyway. But we've saw it show back up today. So we had 1, 2 that are showing a good conservative versus moderate profit spread going into the close today. So 2 out of 5 ain't bad. A couple of examples of what would have been good add-on opportunities in the AXGT trade, and also a good example of a trade around in SPI, even though it was called out early in a conservative profit exit. And I will say, Holly did a pretty good job on the exit up here. And, you know, we can see the buy here, the sell up here. Of course, not getting the upper wick there, but whoever does that, it's, you know, every once in a while you'll get one out of the top, but it's typically the exception and not the norm. So let's talk about how we could capture potentially some conservative profit versus moderate profit spread. And before I forget, I want to back up here because I believe it was Ray that was asking questions about, well, can I still use the AI if I don't have an interactive brokerage account? And of course, the answer is very much so. Yes, you can. Interactive brokers really only comes into the equation when you want to use Brokerage Plus and run your trades through our interface, whether that be manual. You do have the option to automate Holly as well, but you know, way before we ported Brokerage Plus to IB, Holly was around, and that was the only way you could interact with it. And in that capacity, you just pretty much treat it like any other high-quality window that you're watching, but you know it's the AI, and the way that the signals are being generated is from all the back tests and optimization that the AI is doing and producing these statistically weighted sets. That is the uniqueness of the AI. Being able to automate it is a function of Brokerage Plus, but it is not needed. So as you watch these trades pop out, you just treat it like another window. Just treat it like another alert window where you see a symbol scroll through. And obviously, when the AI spits a trade out, you're going to see it pop up onto the blotter here in real time. And as you can see, all the entry and exit times over here as well. So let's take a look at this first one, AXGT. Notice we have a $94.90 conservative profit exit. But if you would have held this one till the end of the day, you're looking at $211.70 based on risk of $100. See a question coming in here. What's the difference between Holly AI and Holly 2.0? All right, before we cruise on to the spread examination here, Holly AI is 1.0, we got 2.0, and we got NEO. So Holly AI, little history lesson here about the AIs. Holly AI, or what we call 1.0, sometimes you'll hear us refer to it as the Holy Grail. That was the first AI module that we brought online, okay? And Holly 1.0 is using all of the quote unquote off the shelf alerts and filters. So if I were to pop into an alert window, when I'm talking about off-the-shelf filters, I'm just talking about everything that's available, all the alerts and the filters. I'm not talking about custom filters that we can create with our custom formula editor. So that's how 1.0 is operating. When we brought 2.0 online, we gave it the ability to use custom filters that we created and inserted into the database for the optimization engine. So the main difference between 1.0 and 2.0 is that 2.0 makes use of custom filters, whereas 1.0 does not. And lastly, Holly Neo makes use of custom filters and is programmed to be the more aggressive of the trio. So typically it's going to have larger winning days, and on the other side of that coin, it's going to have larger losing days. So hopefully that kind of sketches out the differences between the three different AI modules there, Joyce. Right, and so getting back to the AI, the all trades blotter here, at the beginning of the session, before the AI becomes active, this trades blotter is empty, okay? There's nothing there. As the AI produces trades from its respective strategies, which we can see the strategy panel down here, then those specific individual trades are gonna pop onto the screen in real time, all right? The AI is gonna mark the price where the alert occurred right here, and that's what the AI is gonna use for its price. But just keep in mind, we see AXGT get triggered from the AI. Well, if we're running in auto mode, we're going to be in that stock pretty quickly. Most people are not running the AI in auto mode. So what will they do? They'll pull up the chart, they'll check it out. They might think about it for 2 or 3 seconds. And if they like it, they're going to hit the buy button. But just keep in mind, the AI is marking the price at which the event occurred. By the time you pull the chart up and decide you like the stock, you might be paying $5.10, okay? So the difference between that 504 that the AI marks and your fill price of 510 is what we call slippage. So just keep that in mind as you interact with the AI. A lot of the times, these things move so fast, you look at it and think to yourself, well, don't really want to chase it here. Maybe I'll put in a bid in case it pulls back, things of that nature. But yes, the AI spits out all of its trades in real time. Notice the exit reason over here as well. Anytime the AI is exiting a trade in conservative mode, it's going to tell you why it's getting out. Time to exit here, profit save, reduce risk, so forth and so on. All right, so once again, when we're talking about the AI, and I'm trying to give you guys tips on how to interact with it, when we're talking about the spread here, $94.90 versus $211, that's almost, you know, that's 100%, over 100% better if you would have held the trade. Now, what's the decision-making process when we try to decide to hold something? And we have to refer to the charts for that. So I'm gonna go ahead and go back into 5-minute mode here because a lot of these were coming out early. So we need to go to a little bit smaller of a time frame here. Okay, so AXGT, notice the blue arrow right here. That is when the AI called the buy at 5:04. And what do we have here? We had a couple of 5-minute candles, 1, 2, 3, about 15 minutes of sideways action here before we go up here and kind of test that previous high that had been put in the first 30 minutes or so. Now, what I really like about trades like this is once the AI comes and brings it to us and goes, hey, this is statistically weighted, you know, it met my criteria, it's got statistical weight behind it. That's like gold star #1. But then we have the potential for an auxiliary pattern to play out, which sure enough, it did. So if we take a little bit with the AI here, we see this little sideways consolidation, and we see it come up here and pop this opening range break. That's what I like to call an auxiliary pattern playing out on top of the statistical probability that the AI originally brought us. So this would have been a great opportunity to add to that original AI position here. We got the statistical probability here. We got this secondary pattern playing out. So if we took 100 here, might have been a good idea to add another 100 shares here as this opening range break is being hit, okay? What do we have after that? One more little consolidation, a little pop up, a little shimmy back down to the line before a move higher. So not only do we have good performance from the AI here, but we had an opportunity to add to the position here with the opening range break, and you know, a little bit of a pullback through the remainder of the session, but finishing higher. Now, when we see the AI closing something out, and in this case, it was just doing what it was programmed to do, getting out after a certain amount of time, you might be asking yourself, well, what is the time to exit? Well, if we look at the strategy that created the signal there, buyer stepping in, we can come down here and we can see, yep, time stop, 60 minutes. If the profit target or the stop loss has not been hit in that time, it's going to close out the trade there. I think I got on the wrong symbol there. So the shaded area is the AI closing out its trade. All we had to do basically is go, well, it's working so far. It's a little sideways action here. I think I'm going to take more risk and ignore the AI signal to exit and see what happens for the rest of the day. Of course, you still have to maintain a little risk management here. The nice thing about this one is if we decided to stay in the trade and flipped our stop loss to break even, notice how elevated it was all day. So a break even stop would have kept us in this one the remainder of the day. As you're getting used to this process, maybe you do a little bit of both. You're thinking to yourself, well, Holly could be right on this one, Holly might be wrong. Tell you what, I'm gonna hedge my bets a little bit. I'm gonna take half off with Holly. I'm gonna keep that second lot, set it to a break even. That way, if it continues higher, we make more money on the second lot. If it rolled back over and stopped us out, at least we made money on the first lot. So the bottom line is taking a little bit more risk on a pretty decent looking chart here with not a lot of, vacillation, could have increased our profits by about 100% on conservative and moderate there. All right, let's clear the slate here for that one. And let's take a look at another one that had some decent spread. And this one was a short play. Okay, so once again, we're gonna see pretty similar action just to the downside. So original entry signal right here at 41.23. Now this one, notice this one, I'm gonna back up real quick. When we had the long signal here, as this played out, we're thinking to ourselves, might go up here and get that secondary opening range break. That'd be a great add point. This one occurring at that specific point. I've got the line drawn here because that's that opening wick right there. So we have to use that as the low. But this one was coinciding perfectly with the opening range break, downward momentum, not necessarily opening range break strategy, but sometimes we have correlations like this. A secondary pattern playing out perfectly with the downward momentum strategy when this AMTD short was called, which makes me like it even more. And we just got a nice little downward move here. Not a lot of pain. We got a little bit of sideways action here before it finally released. And the same thing holds true. Holly didn't get out down here with the conservative profit exit, or conservative profit mode, I should say. It kind of waited for the bounce up here and pulled the plug right up here, which, hey, no harm, no foul. It still made a little bit of money, but not even getting back up to the entry signal there. So once again, if we wanted to take a little bit more risk in this one, all we had to do was use a break-even stop, maybe peel out a half with Holly, keep the other half, do the whole lot. That's really your own personal risk preference. But in both cases, using our break-even stop would have kept us in both of the AXGT long and the Ameritrade short today. And then Ameritrade gave it up a little bit more at the end here. Say that is the majority of the move going into the last 30 minutes there. So some really nice trades there in AXGT long and AMTD short. Once we get past here, we don't really see anything to write home about in Azul. It just didn't work. SPI though, a great example of what I like to term a trade around, which is when a stock finally makes it down to its stop loss area. How does it react to that stop loss area? Does the stop loss area act like a pivot point? Or, if it would have crashed right through this stop area and never revisited that line again, would have had zero interest in it. But when you see them start to do this type of thing right there at the stop loss area, in essence, you're waiting to see if that stop area is going to act as a pivot point. Sometimes they do, sometimes they don't. This is a classic case of putting in 1, 2, 3, 4, about 30 minutes of consolidation, and even putting in some wicks right there at that stop loss area. So, kind of takes the pressure off. If you're thinking about what to do here, you're thinking to yourself, well, we got some nice consolidation down here. We got some wicks below the stop area, but it appears to be acting as a pivot point. So this is a classic trade around. Stock comes down to the stop loss area, behaves, I should say. Could have taken a long somewhere in this area right here and had plenty of time to sit and wait with this new lower area resting as a stop area, and could have enjoyed some nice upside here, trading at a different time than the AI, but the only reason that SPI was on our radar was because the AI was in it. Now, of course, the exit reason was a profit save, and it did quite well, not top ticking it, but getting out very timely. But then once we see that, we could put it on our radar and see what happens after that. So tracking this one down to its stop area would have paid off very handsomely today. Yeah, sorry about that, Jurgen. No sound. You might want to try logging off and coming back in. Stan, I see your question there. Is the VWAP on the charts accurate? Haven't really heard of any reports coming out to the contrary. Of course, maybe you were referring to Steve's anchored VWAPs there. But as far as I know, I haven't really heard anything about the VWAP indicators malfunctioning today. But if you do see an issue, please reach out to us at info@trade-ideas.com and we will definitely take a look. Okay, that's about it for Holly today. So once again, kind of a light day for Holly, 5 trades, producing some decent gains and a couple of really nice trades there in the first 2, and even a good trade around in SPI. In keeping with tradition, there were plenty of opening range breakouts today being produced by my high volume tickers here. And we're gonna save those for last. And I don't know if Jim is in here, but last webinar, Jim was asking me, he's like, well, can you show me any examples of ones that fail? And it was kind of hard to find any on the long side today that failed, but I did find a good example of a loser on the short side. But before we get into these guys, I want to make sure we have enough time to cover this topic first. And as I was helping people in the live chat this morning, which myself, Steve, Andy, and all the guys do, a lot of the times we'll get some ideas from users. And I was helping a certain individual today that's been quite active in chat, and he's been producing some pretty decent windows, and he was showing me what he was doing with some of them. And I was thinking to myself, I've been meaning to do that for quite some time. And of course, I'm not going to use his one. What's that?
Look over, he's there. Jim is there.
Yeah, Jim. Okay, I'm sorry. Yeah, so Jim, yeah, I will show you an example of a loser. But first, I want to talk about this topic. We're going to go a little bit out of order here. Using alert windows to generate a top list, which I've done over and over in the past, but sometimes you just kind of fall out of sync. But it's a very good way to generate a top list. All right. So what we're going to do today is we're going to use, of course, this is one of my new, I used to have my old turbo brakes windows. I recently modified these, and we're looking more at the relative volume side of things. And each and every day, you're going to see some fantastic plays. And I'll just give everybody a little peek here about some of the things that were coming through today. And let me just minimize that. Okay, for example, and I'm kind of bob and weave here. First, we're going to talk about one of the plays that this window right here produced, CMTL. Okay, when we're talking about clean opening range breaks, this is pretty much the epitome of that. All right, looking at 5-minute candles, clearly we had a buyer in the stock today, a little gap up, and then a pretty sizable up move in that first 5 minutes there. And then what did we have? Of course, the old consolidation, or what we could refer to as buyers and sellers becoming equal, until we get up here and crack this high right here, about $15.03. And from that point on, the little ceiling here became the floor. Did a little tap dance on the floor before we finally went much higher in the day from a percentage basis. So very clean. This is what you want to see. This is what you want to wait for when you're watching these types of windows. The thing is, this little window spit out, I know, in excess of 100 symbols today. So then it just becomes about managing. How much information can we manage? I was looking at one and I missed this one. So just because these high quality patterns are here and I'm showing them to you in retrospect does not mean they're easy to hit with proper timing. So how could we help alleviate ourselves, okay? Make things a little bit easier. We're never going to make things completely easy, but we can lessen the burden, all right? So this technique is relatively simple, and I'm going to walk you guys through it here. So this is how I went through the process, okay? I know that a lot of the things coming through here are going to be high quality, like CMTL, but sometimes we're going to be fortunate enough to catch them right here and be like, ooh, that looks good, I'm in it. Other times we're not going to be paying attention. So how can we help alleviate the data sifting burden here, I should say? So what I'm going to do here is I'm going to duplicate this window. And then we're going to do the following. We're going to use the historical feature. And I pretty much just said, you know what, I'm going to take all the symbols coming through the first 10 minutes and do it that way. But when you get in there and start digging into different windows, you might realize, well, the productive time might be the second 15-minute period or the fourth 15-minute period or whatever you think, okay? But what I'm doing here is I'm just going to take all symbols that were generated in the first 10 minutes by going to the history feature, going to time frame, and just pulling one of these, okay? So market opens at 8:30. I don't need to put anything in the bottom field here. I just need to tell it the start time, which would be 9 o'clock. Market opens at 8:30. I want to see everything that came through between 9 and the open. I could just leave this at 12 midnight. It would do the same thing, but we'll just put it on in there for easy understanding. So everything that came out between 9 and 8:30, boom. Now it's giving me the history. And as you can see, it is lengthy and it goes deep. Even when we get down here to 8:33, I still have the option to go more, okay? So before I do that, I want to capture all these symbols, right? So I'm going to scroll back up to the top. I'm just going to get my mouse here. I'm going to pull it all the way down. And it's going to take a second here, but we'll eventually, I tell you what, I think I can make that go a little bit faster there. There. Now we're cooking. So we're going to get all the way to the bottom. Almost there. Okay, so we're to the bottom. We're down to 8:33. So I'm going to go ahead and clip this chunk here. All I have to do is hit Control-C on my keyboard, and now I've got all the symbols. At which point, I just come over here to Tools, hit my symbol list option, create a new list. We'll just call this one Monday Webby. We're going to edit the list. We got nothing in there. Just put my mouse in there, hit Control-V. Notice it's got all the duplicates, but the symbol list is going to get rid of all the duplicates for us, so we don't have to worry about that. And now I'm going to hit More, get the rest of the history. All right, so now here we are at the top. If we scroll to the bottom, that gets me all the way back down to the end here. So now all I have to do is get this column, do the same thing to finish off the list. In that first batch, there were already 65 symbols. So with this batch, it's going to push us well over 100. So we're going to go back in here, edit the list, get to the bottom, hit return, Control-V, okay. All right, so now check it out. We just captured 154 symbols there. So thank you very much for that. And now we're going to use a top list to monitor these things. And you might be saying to yourself, well, what exactly are we going to monitor? Well, we're going to go back to 15 minutes on the intraday. And most of you know what I'm going to talk about already, but just in case you don't, this green line here is the 10-period SMA. We're looking at the 15-minute candles, what we otherwise refer to as the fast line, brought to you by Mr. Steve Gomez. Thank you very much, Steve. Seems hard to believe it's been like almost 5 years since you introduced me to this, but I've found it extremely helpful. I think a lot of other people out there have done the same. Because if we look at a lot of these symbols today, and here's another one that came through here, AOSL, look how pretty that little range break is right there. Once again, being produced by this window here. But in most of these plays, what you're going to notice is on the 15-minute intraday, a lot of the times that 10 period is going to be in charge. And especially with these stocks that have massive relative volume pumping through them. And you can see here, little AOSL finished the day at 10.71. What a pain-free trade right there. You know, just another textbook example of a nice clean opening range break there. But getting back to the point here, let's take a peek at the top list configuration here because it's relatively simple. Now, we can pretty much dispense with average daily volume if we want to. because what we're going to be doing is we're going to be saying, okay, moving forward, we at least need relative volume of 1, because since we're capturing all the symbols in the first 30 minutes, well, you might have big, crazy relative volume, but it might die off pretty quickly. Matter of fact, the majority of the active stocks that you look at in the first 5, 10, 15, even 30 minutes are going to have really elevated relative volume, and then it's going to slowly sink back down over the rest of the day. So what we're going to be doing here is just, since we're watching a very specific list, there's really no need for average daily volume or minimum maximum price. We're just going to say relative volume has to be 1, and then show me proximity to the 10-period SMA, because it's always nice when we can catch them like this, but sometimes the timing is off, right? Or what if we missed this one, and then later on, it took a nice little pullback. Oops, can't really control my fingers today. What if it took a nice little pullback and offered us basically the same price, but we missed that one too, okay? And here's where this list is gonna come in handy. So, first and foremost, what do we have to do? We have to go into our symbol list, and this one was on a list that I created earlier, Open 10, which is basically the same symbols that I just harvested for you guys. I just wanted to show you the process. But keep in mind, when we first create a list, we have to come in here and find that list. And there's the new list that I created. As soon as I click it, then there it will be checkable. But whether I check Monday Webby or Open 10, doesn't really matter, because that's the same stuff that we're looking at here. So let's just click on that one, see if the list might shrink or get a little bit bigger there. But here you have it. Now, moving forward, the list is going to change throughout the day, but it's going to keep us a nice list here. It's not going to be too big. Remember, the list is 150 stocks, but we're only going to be concerned with the ones that are riding the 10-period nice and tight, and that are at least doing relative volume of 1.0 or higher. And then I've also included that column here, so we can just quickly take a look and go, okay, how's relative volume? You know, is it big, small, medium, large, whatever? But a lot of the times, with that 10-period being in control, as soon as we see a little bit of bleediness or a reclaim of it, it's going to be acting as a potential good entry signal for all of these stocks. So if you're watching this window in conjunction with a top list window of this nature, yeah, you're going to be getting the ones hitting highs, which might be good candidates for these nice clean range breaks, but we're going to have secondary functionality coming in the form of pullbacks, because a lot of the times these stocks get way ahead of themselves, and a pullback to that 10-period is inevitable. So let me just show you the settings that I have in here for. We've got minus 0.3 and a 0.5, which simply means it can't be more than 0.3% below, and it can't be more than 0.5% above. And as I stated earlier, we could probably get rid of that average daily volume in there and still not have a list that is going to be overloaded. Okay, so creating this companion top list window to work in conjunction with this alert window can prove to be very fruitful, because we're getting the ones hitting highs, and if the timing is right, we're going to hit those. And then we're going to use the top list window for potential pullbacks.
Love those 70s colors, by the way.
Yeah, that is 70s colors. They're also University of Texas colors, University of Tennessee colors. But yeah, definitely 70s colors.
Question from Susie regarding pre-market. We don't have relative volume in pre-market, but you are correct. That's a very important data point. We don't measure for it in pre-market, however.
Yep, relative volume only applies to regular session. You know, Steve, I think we had some shag carpet with this color scheme at some point in time.
My mom painted my room with those colors with like cool 8-ball groovy logos, you know, when I was in 6th grade.
Oh yeah, being a child of the 70s and teenagers of the 80s, what a magical time.
Latchkey kids.
Yep, that is right. Okay, all right, so hopefully this whole process and the way to use this window in conjunction with this window, and keep in mind you can do this with any alert window. These are just my favorite ones. Hopefully this process makes sense. So I was just trying to think, is there anything I need to drop as far as a cloud link? And yeah, I could drop the shell in here so you could have this color scheme and the 10-period settings, at which point in time whether it's this window or any of your favorite alert windows that you wanted to use this process with, you can easily apply it. So I tell you what, I'm going to drop this cloud link in real quick.
You know, if you want to, just for the sake of Jim's question there, if you got the 10 SMA up, you know, somebody's asking, well, you know, can you show us the wisdom of that? Yeah, I mean, I can show you a few charts today where that worked, if Jamie pulls them up.
Yeah, sure.
And,
What do you got, Steve? And I
and
still want to, I will still show Jim the losing trade. I have
yeah.
not forgotten about that.
You know what? Stretch the chart down more so it's not so horizontal, because it gives it a much better impression if it's got more squareness to it. There we go.
Talking about that? Okay.
Yeah.
All right. What do you got?
Let's look at that green line there as the focus. And so the first one is PEIX. I don't remember where I saw this one. But you see how it rode that line all the way up today? Pretty cool.
Mm-hmm.
The one that I was in today, XSPA, that one pretty much held that line all day long.
Mm-hmm.
Trying to think of another one. There was another one, but I can't think of it offhand. But that's the wisdom of it. Go ahead.
Yep. And check this one out. I mean, as soon as we got a close here on this NR below the 10 period, look at the action that ensued, right?
That's the other way to use it, is when the other side of the mountain, when it breaks and doesn't work. I dropped this one in Char's Discord earlier. Well, it's actually a trade of the week. I'm idiot. SWBI would be probably a great one to end on. This thing was respecting pretty much all day except there for the close. Not bad. So Dave says VIR. Let's take a look at that, and I'll just give it back to you to close up.
Oh yeah, VIR was also. Okay, no, I was getting that one confused with a different one, but yeah.
Okay, so Jim, there's some great examples of all it's telling you is a binary situation. Should I stay in the trade? Is it still above that line? Its momentum intact? Yes. Did a 15-minute candle close below this line during the middle part of the day? That might be the place to take your profit exit if you're in profit-taking mode. It's that simple.
Exactly, and you know, in lieu of the theme of the day and the strong upside counts and the strong performance to the upside we had, you know, starting to see this little window come back to life. The version of turbo brakes that's looking at things hitting all-time highs, and there were a couple of good runners there. Here's a good example once again of the 10 period. This BGNE sprung out to blue sky today, and check out that 10 period action.
All day.
Got a little bleedy here, and then you know,
that was
finally,
pretty much it. You couldn't have really done much better once that candle closed below the momentum line, the Gomez line, the fast line, whatever.
Exactly, and another example here on another stock breaking out to blue sky is C-Day. All right, and check out the 10 period. I mean, hugging it like a glove. You know, a little bit of a bleed, but no close there, and strong into the close. C-Day, probably definitely one you want to keep your eyes on the remainder of the week. Now, a couple of minutes here before I give it back to Scott. Did want to show a couple of downside plays that are always here. This little window producing the downside, this one producing the upside. But CNK, you know, clearly a seller. Got the buyers and the sellers equal. We get this range break here, and that was good for a little 5% down move between this level and this level. Notice the exact opposite is in play on the 10 period. Okay, as soon as it reclaimed the 10 period, well, it firmed up, got a little bit weaker, got that close down here, tempting at lows towards the close, as that 10 period is acting as the hammer now. And of course, what's going on with CNK? Cinemark Holdings. I think the news came out today where they're closing all the theaters again. Well, I never even knew they were open again, but obviously, that's what's going on. So you know, CNK might have a date with the all-time lows before too long. What was that, Steve?
The death of an industry.
Yeah, but somehow I think, yeah, who knows how they're going to keep it going.
I'll tell you what, real quick, great question from Mr. Guatam, if I couldn't pronounce your last name correctly. I'm going to share the cloud link to the 15-minute chart that I use that you saw earlier, and I'll just drop that in the chat window. And if anybody else wants to just grab that cloud link, that's my official 15-minute chart window. You can use the cloud code function and have a copy of that. I'll label it one more time, my cloud chart 15-minute. I'll even drop it again.
Yeah, good point, Steve. Oftentimes I forget that the cloud
Me
functionality
too.
works with charts too.
Well, let me tell you a funny story. I was over at Dan's house, and I just could not get his stupid mouse to work, and he was on a developer crazy version with different menus, and I literally was fumbling around. I go, you know what, Dan? I'll just email you my cloud settings
Exactly.
to show him this exactly, because he hadn't dialed this in yet, and his eyes were opening finally.
Okay, I'm trying really hard to forget to show Jim this loser, but here it is. Okay, and I couldn't really find any that pulled back enough on the long side today, but here's a perfect example. We got to pop back over to 5-minute. It was a short that failed that looked pretty solid. Okay, so notice the action, and then we got this, nice little consolidation here. We got the breakdown about an hour and a half into the open. So you're thinking, sellers come back out, massive volume. I tell you what, I'm going to take a chance and short it right here. But what do we have to do? We have to use the high of the prior 15 minutes as our stop. So we'll count them off here. That's 1, 2, 3. So we'd use the high of that wick right there. Looking like it wants to. It's towing the line, but nope, not to be had. Comes back up here, stops us out, only to roll back over and end up working. Okay, that's just part of the game. All right, stops happen all the time. Stops happen way more than we want them to, and a lot of the times they go right back the direction that we had originally thought they would. But what's the best saying to that, Steve? Sometimes the second mouse gets the cheese, and that's the case in this little short play here as well. Not the prettiest chart pattern, but a good example of a pattern that looked promising, but wasn't to be had. Came, stopped us out, rolled back over, and that's what they look like, right? So, plenty of those out there each and every day, but also plenty of ones that actually follow through as well. Oakley dokley, I think we're just about out of time here. I want to thank everybody for popping in. So Steve, anything to add before I bring Scott in?
No, other than somebody asked me if Lyft looks good, and it just doesn't. I'm sorry to tell you. Maybe you're looking to short it. Maybe that makes you happy, but if you want it to go up, it doesn't look good. Lyft.
Yeah, it's just kind of in the little channel.
It's below all its
channel
moving
down there.
averages. Below it's all its moving averages. Got nothing supporting it there. It's kind of hanging on by a thread.
Yeah, but if we pull up its big brother, Uber, a little bit different of a story.
Looks like Uber has a different story going on there for whatever the reason.
Interesting.
Pairs trade. Buy Uber, short Lyft.
Might not be a bad idea. All right, Scott, if you are ready to walk us out, sir, and let everybody know how they can save a little bit of money on a new sub or an upgrade, I think it's that time.
Yeah, sounds good. Thank you both for the presentation. We do have a new podcast coming out in the next day or two. It's another one hosted by Sean McLaughlin. It's going to have a nice interview, so tune in for that. And you can get ready to receive it by searching for Trade Ideas Podcast wherever you listen to your pods. There is a promo code, Fall Savings, all caps. Make sure that you use that when you decide to do a purchase today or tomorrow, and or if you want to do an upgrade from standard to premium. You can find Jamie on Twitter at QuantBot. You can also find Steve Gomez at Today Trader. Trade Ideas Pros, our Facebook handle, to like and share everything there with your friends, and send any questions to info@tradeideas.com. That gets you to our help desk. We're going to have the recording up later on tonight or tomorrow, so stay tuned for an email reminder tomorrow about how to find it. And thank you. Thank you, Jamie. Thank you, Steve. Have a good one.
Thanks, everybody. We'll see you tomorrow.
See you tomorrow.